Yep. Okay, great. Welcome to our webinar on DomaDirect. Right, there we go, DomaDirect. And yeah, it's big night tonight. I know we've got about 600 plus people who have registered for tonight's webinar. So I know a lot of you are very keen and interested. And based on the feedback we had from last week's webinar, huge number of questions. So I want to make sure that tonight we have a great question and answer session for you. So before we get started, just want to point out that if I just change the view for you, down on the, you see down over there, the bottom right-hand corner of your screen, right outside this video, you'll see the little help button. You guys know the drill. You can click on that, and you'll be able to bring up the Zendesk question box, right? So tonight it works, so you can actually ask me questions. I've got the questions here, so we'll be working through the questions together tonight. Plus, I want to go back over some of the questions we got last week to help you guys. Plus, we've created an FAQ section on the DomaDirect website, which lists all the questions we got last week and the answers. So I'll show you where that is in just a few minutes. Okay, so before we get going, let me just take you through our general disclaimer. What you're hearing in tonight's presentation is what we call general advice. It's not individual specific advice. Furthermore, we haven't taken into consideration your personal financial objectives, right? Investing involves risk, right? Past returns do not mean we'll make the same in the future. And finally, Trading Pursuits and DomaDirect Australia Proprietary Limited both are authorized representatives of the Trading Pursuits Group, and which holds an Australian financial services license. Okay. Great. Now, what we'll do in the first few minutes is just quickly go through a recap of the overall DomaCom system and the various different pieces, right? Just to refresh our memories before we start getting back into the questions we had last week. So while I'm talking, if you have questions, be sure to pump them into the question panel. We're here tonight to make sure we answer your questions. Also, the application process is now open, and the DomaDirect website is now live. So we're going to go through both the DomaDirect site and the application process, so you know exactly how to fill out the applications and get going. Okay, so in a summary, right, if you're a self-managed super fund or a regular any type of investor, and it can be a retail, a wholesale investor, anybody, you can open up an account and invest. Now, as we know, the minimum investment is $6,500. $500 of that is held as a cash balance, and I'm going to talk more about that cash balance. A lot of you had questions last week about what is that cash balance for. So we'll talk more about that in just a second. So the $500 sits over there in a cash balance, and then the $6,000 gets split up between three $2,000 investments into three different properties, right? So you're not buying the whole property, of course, you're buying a fraction of a property, much like buying shares as a fraction of a company, right? Now the benefits of this, right, is that real estate becomes a viable asset for people who never otherwise could afford to or have enough capital to get into real estate. So self-managed super funds, individual investors. It means that real estate now, we've leveled the playing field. And that's why we call it the property revolution. It's a chance for everybody to participate in this fantastic market we call real estate. Risk, of course, is also diversified. By having a portfolio of three properties straight away, you haven't allocated all your money into one property. So you've got your risk is diversified geographically and potentially by property type. And you don't have a leverage risk because there's no mortgages on any of these properties. Everyone putting in their cash collectively is enough to buy the properties and put them into the DomaCom system. So there's no risk of, there's no influence of interest rates. There's no potential threat of being over leveraged into a property. Everyone in there is putting in cash. Now, as we know, the minimum investment is $6,500. $500 is held in a separate cash balance, and that earns interest, right? And then the $6,000 is used, of course, as we said, to invest in the three different properties. Now, to be clear, on the $500, right, when you first invest, that $500, like I said, is held in a cash account for you, as the investor. That $500 is then used to cover the property purchase costs. So that would be things like the stamp duty, independent valuations, the conveyancing and other legal fees, building inspections, and any other related property expenses that DomaCom will have in purchasing the property. Now, when all that's said and done, when the properties are purchased, then what's remaining goes back into your cash balance account, okay? So $500 is approximately 8% of $6,000. So whatever you want to invest, right, into the properties, DomaCom require you to put an additional 8% on top of that to cover the cost. Now, the 8% is more than enough to cover the purchase cost, the stamp duty, the conveyancing, etc. It's more than enough. So out of the $500, you will have some left over, and that will remain in that cash balance account, and it will earn interest. Now, there's no need to have it. There's no minimum balance. You don't have to keep that at $500 after that. I think that may have been a little bit confusing for people last week. So the $500 that goes towards, or the 8% of your investment, 8% of $6,000, goes to cover the purchase costs, right? Now, some people are asking, Daniel, what if I want to invest more than $6,500? Is it $6,500 times 2 or times 3? No. Now, what it is you need to, whatever amount you want to put in, right, plus 8%. So, for example, let's say you wanted to invest $10,000 into property, you would require $10,000 plus 8%. So if you multiply 10,000 by 1.08 for 8%, you would need $10,800, right? Again, the $800 is held in the cash balance. Now, you earn interest on that. That $800 isn't immediately spent because the property may not settle for some time. In the first property portfolio that we've brought out, the first 3 properties that we talked about last week, I'll talk about them again tonight, one of them is ready for settlement straight away. It's built and finished. One of them is under construction. Well, two are under construction, but one will be finished in July. The other one will be finished in October next year. So just shy of a year from now. So before they're settled, right, the money can stay in your account earning interest for you, but the cash is there ready to go for when the properties are ready for settlement, and then the money's there to cover the purchase costs, right, stamp duty, etc. Okay, if you wanted to invest more than that, say you want to invest $100,000 into property, into fractional property, you'd require $100,000 plus 8%. So you'd require an additional $8,000. And once again, the $8,000 is used for the property purchase cost. So that's in a nutshell how it works, right? Now, DomaCom, as we talked about last week, operates as a managed fund. So you don't have a direct stake, or your name is not on title of the property, correct? The property is purchased and put into the DomaCom fund structure. Now, ASIC, as we know, Australian Securities Investment Commission, they act as the regulator. So they're regulating it. They've issued DomaCom an Australian Financial Services license to allow them to operate this structure, as well as to be able to make a market, which means the secondary market. We'll talk about that in a moment. We also have Perpetual, who acts as the responsible entity and the custodian. So they're the ones holding the cash. They're the ones who actually go on title. Perpetual Corporate Trustees is the name on title for the property. So they're holding the property in trust for the unit holders of the DomaCom fund. And like we said last week, every property sits in its own segregated sub-fund. So each individual property is siloed from the other properties. And each property then issues out units to the investors who put their money specifically into that property sub-fund. So there's already multiple properties already in the DomaCom fund system. We're adding more through DomaDirect. We'll be putting initially these 3 and then more as we go. And the important thing to realize is that each property is siloed, so any expenses and any repairs potentially required for that property are borne and responsibility of the unit holders of that particular property. If expenses are required on this property, it doesn't flow over to other properties where other investors have to put in money. So it's not a pooled system. It's all segregated sub-funds. Very, very important and very fair. I'm sure you'd agree, right? So like I said, DomaCom is the main fund. Each property is held in a segregated sub-fund. Investors purchase units, and it's all proportional ownership. So if you were to purchase 10% of the units, you'd have 10% ownership of that property sub-fund. Now, if you bought 1% of the units, you get 1% of the ownership of the property sub-fund. And like we just talked about, security and protection for investors, right? DomaCom is licensed by ASIC, who have issued them the only license of its type in Australia so far. So DomaCom is the only company in Australia which has that specific ASIC license to allow them to operate not just the DomaCom fund, but also to make a market, which means have a secondary market specifically for units in the DomaCom fund for both retail and wholesale clients, right? So that demonstrates, the seriousness that ASIC recognized the DomaCom fund and the compliance that they've gone through to allow them to be able to offer the service to retail clients, which are the most protected clients by ASIC in the marketplace. Okay, now the the responsible entity and the custodian, like I just mentioned, that's Perpetual, and Perpetual, that's what they do as a business. They're Australia's one of Australia's largest wealth management businesses. They already administer over $545 billion worth of assets. So fantastic for DomaCom to have one of the most reputable and respected institutions being the responsible entity and the custodian, safeguarding the money for investors. Okay, you can check out Perpetual's website yourself. You know that, probably heard of them, seen their ads on TV and stuff. They're massive. Now, as we know, the first portfolio that we've brought out for DomaDirect, right, features 3 different properties, all brand new, all 2-bedroom, all in Sydney, right? So we went through a brief description of them last week. We're going to go through another brief description tonight just to familiarize yourself with the properties, but we'll do that in a few minutes. And like I said, who can invest in DomaDirect properties? Well, everyone, right? As we said, retail investors, so people with less than $2.5 million net assets or less than $250,000 income per year for the past 2 years. Generation X, millennials, baby boomers, retirees. I know personally, a number of people I've spoken to want to set up accounts for their children, right? So they can put in, a couple of $1,000s a year and purchase some property for their children to have it when they get older, right? So they can say, here you go, kids, you've got an asset. And one of the things that really excites me the most about DomaDirect and DomaCom is we all know, if you're watching this tonight, you're a client of Trading Pursuits, you know how incredibly powerful it is to feel like you're participating in the financial markets, right? You feel smarter, you feel more engaged, you feel part of the game. And 92% of Australians, like we said last week, 92% of Australians do not own investment property. So they're not even playing the game. And fair enough, and most of them can't afford to purchase one property on their own, or even come up with a deposit to purchase one property on their own. But now they can have an ownership in a property sub-fund across a variety of different properties, right? It gets them in the game. So I think the mind shift, right, the sense of intelligence and a feeling of being part of the bigger picture is so powerful that's one of the biggest reasons why I got involved with DomaCom and set up DomaDirect, because the shift in identity and the shift in the sense of building a financially abundant mentality is so dramatic when people feel a sense of ownership. And this gives people not just a sense of ownership of one property, but a portfolio of properties. I think we're going to see a really fantastic shift in consciousness, particularly amongst the people who could use the biggest shift in consciousness. Wholesale investors, they're already invested in property and stuff, but this gives them a great way to diversify as well. Self-managed super funds, another huge sleeping giant. And like I said last week, the amount of money that can come in from self-managed super funds is absolutely staggering. 100 billion plus could trickle down in from the self-managed super fund market into fractional property. I think that's going to be the big mover immediately into this market will be the self-managed super funds, because they've already got the money. It's sitting there in their accounts. They don't know what to do with it. Half of it's sitting in the bank. It's ready to go. This gives them the facility to do that. And family trusts, corporations, etc. can do this as well. And like we said, the secondary market, right? It's one centralized marketplace. This is one of the key things of DomaCom, which I think is going to ensure its success in the future, is that you need to have liquidity. Anybody can buy something, but you need to be able to sell it. And the secondary market and the license that they hold to run the secondary market, and they're only company in Australia with that license, means that it gives investors the confidence to know that in the future they'll be able to sell their units in property sub-funds without having to go and find a buyer on their own. They just have one centralized market, just like going on the stock market into IG or someone. You don't have to find someone to buy your BHP. You just go click sell, and you put the market up. You put the order up there. So, like we said, DomaCom is the first and only regulated fractional property exchange system, not just in Australia, but in fact in the entire world. Right? It's the first time this sort of regulated structure with a responsible entity, with a corporate watchdog, with a secondary market attached, the license. It's the first time in the world this has actually occurred. And DomaCom are already looking internationally to set up a similar system in other countries. So DomaCom certainly plan to expand internationally. Okay, so if we've talked, that was a bit of a summary from last week. Let's now go through some of the steps to investing. Okay, so you can go to DomaDirect, right? So just to reiterate, DomaCom is like the stock exchange, like the ASX. You don't ring up the ASX if you want to buy BHP shares, do you? You have to go through a broker. So DomaDirect is that licensed representative, that licensed organization that can allow you to transact fractional property in the DomaCom system. So it's a direct link between the investors and DomaCom, right? So you go to DomaDirect.com, right? The website's now live. I'm sure many of you have probably already had a look at it. From DomaDirect, you can click on the Join Now button. Just to the left of that, you see the Watch This Video. That's last week's webinar. So if you want to watch again what we talked about last week or show some friends of yours, whatever, you can click that Watch This Video link. But right now, we'll click on the Join Now button because it's now live and active. So when you click on the Join Now, all right, you'll go through the Register Now process, right? You just put your first name and details, click Register Now, and then that'll send you an email to then click on a link that will take you into the account application process. And it will already pre-fill out some of those details that you've entered, right? So if you've ticked an individual account, or a joint, or a sole trader, or a company, or a trust or superannuation fund, it'll already have recognized that. Now, just to be a bit clear on this point, obviously, if you're a super fund, self-managed super fund, now we had a couple of questions because you have the choice of doing a company trust as a super fund or an individual as a self-managed super fund. Okay, with your self-managed super fund, you've got it set up one of two ways. You have the self-managed super fund trust, and you have to have a trustee. Now, some people set up a company to be the trustee for their self-managed super fund. Okay, so whenever you fill out the documents to buy or sell something for the self-managed super fund, if you're putting down ABC Proprietary Limited, ATF, or as trustee for your super fund, then you have a company, right, as your trustee. If you're putting down Bob and Judy, Smith, as trustee for, or ATF, the self-managed super fund, then you are individual self-managed super fund. You don't have a company structured for set up as the trustee for your self-managed super fund. I'm going to give you a phone number and an email address in just a few minutes that you can contact us if you have any questions regarding this. We really want to make sure that you have a seamless and experience as possible to set this up. I know it's a bit of a exercise to set up your account initially, and this is where people tend to get hung up the most with the self-managed super fund scenario. So we want to talk you through that as best possible. If you're setting up in your own personal name or a joint name with you and your wife or you and your partner or whatever, then obviously you can click on individual or joint, etc. If you're setting up in a company structure, obviously click company. So you go through, you choose the one you want, click on the next button, then you just go through the process. It's not very hard. You type in your primary applicant details. So obviously if you're doing joint, you do this twice because you have primary and secondary applicant. You put in your various details, scroll down and fill in the details, click on the proceed to next section button. Go through the next section, which asks you for proof of identity. So it asks you for your birth date, tax file number. If we scroll down, more details about your contact details, click next. Then it asks for your mailing address. Now, if your mailing address is the same as what you just put in, just click Use Primary Applicant's Residential Address, right? So that'll just get rid of the rest of it. If you're using a different address, such as a P.O. box or an accountant's office or something, if you're doing a self-managed super fund, then you'll have to put those details in there, right? Like I say, it's very self-explanatory. You need to put in a nominated bank account detail, okay? So the nominated bank account for your self-managed super fund or for you personally, you put those details in there. The reason why is because when you want to take money out of the DomaCom platform, you need to have a bank account for them to deposit the money to. So you have to put that in when you open up your account. Click on next. And finally, you'll get to this additional information. Now this one might be a little bit confusing. So let me take you through, right? Question number 1, it says distribution reinvestment election, okay? Yes or no. All right. So what that means is when you set up your DomaCom account, you also have a cash account in DomaCom, right? Where that's where the $500 goes until you use it for purchase price, for purchase costs when the property is first purchased. And that, of course, earns interest. And the interest that it earns is approximately 0.6% above the ANZ overnight rate. So it's quite a high rate. I mean, we are talking 2.8% interest right now, which is a pretty high rate for Australia, but it's still just 2.8% per year. Now, if you click yes to question 1, all right, distribution reinvestment election, if you click on yes, what that means is that the monthly rent that you receive, all right, from your investments in the various property subfunds will stay in your DomaCom subfund, your DomaCom cash account, okay? And it will just continue to earn that higher rate of interest. If you click on no at this point, it will be paid out to your nominated bank account, okay? So just think that through. If you're investing, right, if you're investing in DomaDirect and buying these properties and you want the rent that's being paid from the properties as a potential income for yourself to live off of, then you've got to, and you want to have it automatically into a nominated bank account, you would click no to this answer. If your attitude is, no, I want to keep the money in the DomaCom system, I want to build up, and as the rent just builds up, you can then use it to buy more units, either in the same property subfund or in a different property subfund that we may have on offer in the future. So you can leave the money in there. If that's your case, which I suspect most of you are in that category, let the rent accumulate, then click the yes button in this case, right? The next one down, right? So yes, income goes into your DomaCom cash account. If you click no, the income goes into your nominated external bank account, right? Pretty straightforward. Below that, you'll see it says the amount to be invested, and the minimum total investment, it says there $2,500, okay, is required to establish account in the DomaCom fund. However, with DomaDirect, the minimum investment is $6,500 because DomaCom have a minimum investment of $2,000 per property. But through DomaDirect, we're not offering the properties as one individual investment. It's offered as a portfolio of 3 properties. So you're getting $2,000 invested into 3 different properties, plus the $500 to cover the purchase costs, stamp duty, etc. So though it says minimum $2,500, the actual minimum you require to invest through DomaDirect is $6,500. Okay? And you scroll down, you'll see question 3 there tells you where to send your money, whether you do by check or direct debit or BPay. And the final question there, question 4, it says, is this application signed under power of attorney? So if you click no in most cases, all right? So if you're opening up the account in your name and you're doing this, then you don't have somebody else acting for you with your power of attorney, are you? No, you're just doing it yourself, so you'd click no. If you're setting up a self-managed super fund and you are one of the trustees or directors of the self-managed super fund, then you click no, because you're the one responsible, you're the one in control of that self-managed super fund. If, for example, somebody else is setting this up for you and you've given them a power of attorney to act for you over your money, your accounts, your self-managed super fund, etc., then you would tick yes. Okay, so long as you've actually set up the power of attorney setup and someone else is doing it for you legally that way. So I suspect that most, if not all, of you will click the no button in this case. All right, so click on the next, and then it just reviews it. So it's a pretty simple process: name, address, etc. Just check it all before you click the submit button. Scroll to the bottom. All right, it'll ask you to declare certain points that you understand, so you can go through and read through these points. They're pretty straightforward, and tick the boxes down the bottom. Now, there's what's called electronic identity verification. So long as you put in, it'll ask you for your driver's license number as you go through the process. Your driver's license number, or you've provided your passport details. So long as you provided the information and it matches up, like your address matches up. So if you, like with the road transport RTA, if you've changed address and you haven't told the RTA, put your driver's license number in, it doesn't quite match up, it'll kick it back. And in that case, you may be required to get a copy of your driver's license certified by a JP or someone and then sent in. But so long as your details match up, so as you go through the account opening process and it asks for your driver's license and your driver's license matches your residential address and everything's fine, you will not need to make copies of anything. It'll all go through with electronic identity verification. Same thing goes for your self-managed super fund and your company. So long as all the details match up correctly and addresses are all correct, it should go through quite smoothly. If it fails in that case and there's a problem somewhere, then you'll receive an email and our team will be straight away within a day contacting you to sort of help you through and fix up the situation. You may have to take, like I say, you may have to get a photocopy of your driver's license or your passport or a rates notice to prove your residence, and then get that certified by a JP or lawyer or somebody, and then scan that, email that in, and then they'll get the account opening for you. So we try to make it as easy as possible with no paperwork required, so long as all your details are correct. You'll also receive an email. When you go through this process, as you're going through it, you're going to be sent an email with a PIN number, okay? Just to prove that you're an actual physical human being doing this. And so when you receive that email, you'll have to put in the PIN number down the bottom. Of course, that'll just confirm the whole thing, and you click I accept, right? And that'll set up the account for you. Now, that whole process should take you 5, 10, 15 minutes, depending whether you're doing individual or company or self-managed super fund. A bit more detailed if you're doing it in the other structures. Individual, you'll sail through it in 5 or 10 minutes at the most. Now, like I said, here's the phone number and an email address. Okay, so if you have any issues, any questions whatsoever, please don't hesitate to contact the team. They're very, very helpful. They're really keen to help you out. Make sure this is nice and easy for you. info@domadirect.com. or phone Sydney number 02-8766-0459. And if you phone out of hours, there's a message bank system. You can leave your message there, and the team will respond to you as soon as they are able to. Now, given the fact that we've got about 600 odd people watching this tonight, we'll try to get back to all the people that we need to as quickly as possible. But it may take us a day or so. So please be patient. We'll be processing it as quickly as we possibly can as we get going. Okay, so steps to investing. You've gone to DomaDirect, you've opened up an account. Then, once it comes back, says, yep, your account's open, everything's great, it'll give you the details. You can then deposit your money, minimum $6,500. You have a 14-day cooling off period. Now, in that 14 days, you'll be able to then start to apply the money to the portfolio, right? In that 14 days, you'll be able to say, okay, now put the $6,000 onto the portfolio. I'm going to show you how we do that later on. However, in that 14-day period, if you change your mind, right, you can pull your money back, get out of the whole situation, and at no risk, right? So you can tile your money back, say no problem, no cost to you, right? After the 14-day period, if you've applied to enter into one of the property portfolios, then before the properties settle, so as the money is being raised for the properties, once it gets up to a certain threshold of capital raise, approximately 50%, DomaCom then go and do due diligence on the property. So they'll do an independent valuation, they'll do a property inspection to ensure the property is decent value, is appropriate value for the area, and that it's in good condition. Right? Now, all the properties we're dealing with are brand new properties, so they also come with builder's warranties as well. But DomaCom will go to do the due diligence to ensure the properties are sound investments from that point of view. And so if you then decide later on you want to get out, when all the money's been raised for the properties, you'll get another email from DomaCom, right, just before settlement, where you will be issued the supplementary PDS specifically for that property. You have to accept that property at that point again, and it goes through and you've purchased your units. If you decide at that point that, no, I've changed my mind, I don't want to invest, then you'll get your money back, right? However, you will be up for your share of the costs, right? So you're proportional. So if you've invested the minimum, right, you'll be up for the minimum little stake of the due diligence cost, the independent valuation, the building inspection, etc. Now, the valuation and building inspection, I think it's maybe $2,000 or $3,000 in total for the entire property. So, your stake will be your share would be pretty small if you're only putting in the minimum amount of money per property. But just be aware, in the first 14 days, you have a 14-day cooling off period. You get all your money back, no questions asked, no problem. After the 14 days, you can still choose to, even when you've said, I want to invest in this property, if you change your mind down the track, you can still say no, but you will be up for some cost, your share of the due diligence costs and any costs incurred at that point to get that property ready. Now, while your money sits before settlement, right, your cash, the minimum, the $500, that's sitting in the account earning interest for you. When it comes to settlement, all right, or if we're doing due diligence costs or building valuations, then the money will be pulled out of that $500 amount to go towards those costs as we go, right? So your account will drop down. But after all 3 properties are purchased, you will still have some money left over, maybe 100, 150 bucks, something like that. And that will continue to earn interest. Okay, but there's no minimum at that point. You can pull that money out if you wanted to, or just leave it there. And if you've nominated to have your rent go in there, then it'll just keep increasing over time. But you're earning 0.6% above the ANZ overnight rate, which is a special rate that DomaCom have negotiated, which is a pretty high rate given the liquidity of that rate. Now, once your money's in, straight away, you don't have to wait for the 14-day period, cooling off period. Straight away, you can start to apply what we call bid for your units. That is, you say, okay, I want to put my $6,000 into these 3 different properties in the portfolio. Now, it says there on the DomaCom platform. Now, the DomaCom platform is not it's not live for DomaDirect just yet. It will be live this week. So next Monday, I'll be doing this webinar again, and I'll be taking you through the DomaCom platform and specifically how to place your bid. That's fine because it's going to take a few days for your account to get open and your money to be deposited. So do that this week, right? Get your account open this week, deposit your money this week, so that next Monday, when I show you exactly how on the DomaCom platform to actually place a bid for the property portfolio, you'll know exactly how to do it. Because it is a first in, best dressed scenario, right? The first people to bid. And once all the money's been raised for that, that's it. And already tonight we got about 600 people. We had about 270 people watched the webinar last week, and over 200 pre-applications were set up. So there's about a 70-80% take-up rate of people who want to participate in this. And I suspect that a number of those people will be investing more than the minimum $6,500. So the first in, best dressed, they get the properties. If the properties have sold out, then we've got to go to the next portfolio. Right? So a good idea to have your account set up this week, have your money invested, ready to go. I'll show you how the platform works next week. You can place your bids, and you'll be in the game. Like I said, you can invest $6,500 or more. Right? $6,500 is just the minimum, and we said whatever you want to invest plus 8%, that's what you need to go forward. Like I said, DomaCom conduct due diligence. Once they've reached a certain amount of money for the property, they do the building inspection, the independent valuation, etc. And that covers the security for investors. And then as the properties settle, right, the cash that's been sitting in your cash balance, it'll be used to cover the payment costs. You'll receive units in the fund, and away we go. Property is then professionally managed, right, and the rent will then be distributed to the net rent after expenses will be distributed back to investors on a monthly basis from DomaCom into your DomaCom cash account or into your nominated bank account, whichever you chose. Excellent. Okay, I think you pretty much get it now. It's not complicated. It's just, obviously there's a lot of steps involved, but that's for the protection of investors to make sure money goes all in the right direction. Now, we mentioned last week, I'll just reiterate again, DomaCom, right? Fantastic company. I've been working with Arthur now for about a year. Arthur is the CEO, of course. You met him last week in the video. They do charge a 0.22% per annum fee on the cash balance that's in the cash management account. So right now the interest rate is 2.8%. Take off 0.22%. So investors get 2.58% per annum on cash balances. So the DomaCom charge a very sliver of income on that. And then they have a fund management fee, and that covers the cost of the perpetual, the responsible entity, the custodian, the DomaCom fees, the technology fees, etc. That's 0.88% per annum of the value of the property. So and that's typically paid out of the rent. So if the property is getting a 4% rental yield, when you take out 0.88%, it brings it back to about 3.12. So the properties are still positively geared, right? Because there's no gearing, right? So they're cash positive properties, so long as they're of course rented and the rent's coming in. Now that comes back to DomaDirect in identifying properties that have a high rental demand. And I'm sure you'd agree that the 2-bedroom apartments are particularly high demand, especially in well built up areas close to a lot of services, amenities, transport, etc. So that's specifically what we've chosen. So there's really no risk about the properties not being rented. There might be a period of time where they're in between tenants, etc., but it's not going to go for a whole year without rent. Plus, DomaCom take on building insurance and landlord protection insurance for every single property. So, if the tenants don't pay the rent, or if they damage the property internally over and above normal wear and tear, well, then insurances cover those costs, just like you would do yourself if you owned investment property. You'd have landlord protection insurance and building insurance. And in the case of these three properties, they're in a complex. So there's a body corporate, which is responsible for the exterior of the building, right? We're only responsible for the investor's only responsible for the interior of the buildings, of the units. Now, also finally, of course, you've got the cost for property management. Of course, the property managers get paid a fee, and there could be expenses involved in maintaining the property to a rentable status or standard. So those costs are, of course, borne. They usually typically paid out of the rent as they go, and these are brand new properties, so they should not need should not need paint or carpet or any of those sort of costs for quite some years. Eventually they will. And the depreciation of the internal chattels and the building itself flows back to the investors as well. So you get all the benefits of direct property ownership without having to be the only person on title and carry all that risk yourself. You're sharing that risk with a bunch of other investors, but of course you're getting all the benefits of direct property ownership, but in this fractional platform. And like we've said, DomaCom has no establishment fees, no contribution fees, no withdrawal fees, and no exit fees. So the fees I've explained, are the fees. DomaDirect, our company, right? We don't charge any fees or charges to investors if they're coming into the system to purchase. We do charge, right? We do charge a commission of 2.5% to investors when they sell their units in a DomaCom property subfund. Okay, so in the future, you'll choose to sell your units, and when you choose to do that, we will charge a 2.5% fee, approximately 2.5%. And that's similar to a real estate commission. So DomaDirect, we have a real estate license as well under our company, DomaDirect Realty, Australia Proprietary Limited. We hold a real estate license. And so in the future, when you choose to sell property, there will be a commission paid back to DomaDirect, similar to that of real estate commission, so approximately 2.5%. So for example, if you were to sell $10,000 worth of property subfund units in the future, you'll be charged 2.5% from DomaDirect, and that'll be about $250 on that, right? And again, that's only charged when you sell. If you keep holding your units for years and years and years, you don't pay that fee, only upon selling your units. Just like if you sold your real estate, you'd pay about 2.5% fee to the agent to sell it for you. It's the same sort of thing. All right, so the benefits overall, you get very low capital required to get started, proportional ownership, diversification, professional management. It's available to absolutely everybody. Cash earns a high rate of interest. We have a secondary market, just like the stock market, to unsell your units in the future. And finally, we have a regulated and protected system for investor safety. So it really is, I'm sure you'd all agree, it's a fantastic concept. And brand new in Australia, and I believe is going to absolutely take off, not just in this country, but it will expand to other countries as DomaCom take the system internationally as well. So it's a very, very exciting time. You can understand why when I first heard of DomaCom last year, I got very excited, and I've been working closely with Arthur for about a year, but seriously in the last few months, and to bring my clients and the general public the DomaDirect system. So we're only offering this at the moment to Trading Pursuits clients. We've come to you guys first, but we will be bringing this to the general public in a couple of months' time, probably early next year. We'll be launching it to the general public. So you've got a bit of a head start, if you like, to get in now. Okay, so let's have a closer look at that DomaDirect portfolio that we have, right? So you can go to DomaDirect.com. All right, the website's now up. And if you scroll down off the homepage, you'll come to the Sydney property portfolio to begin with. All right, we went through this last week, so I'm just going to quickly touch on it again. As we said, all two-bedroom properties, all in Sydney, all very close to transport, hospitals, schools, shops, etc., and all the areas where there's extremely strong rental demand. And one interesting thing too, I was chatting with Julie this past week, and she mentioned something that I thought, oh, this is really quite a powerful point as well. That, like last week, I mentioned that according to the Australian Bureau of Statistics, the population of Australia is likely to double by about 2070. So within the next 50, 60 years, we're not just going to have 23 million people like we have now, we're going to have 47 million people. And where are all those people going to go? Right? We're not like America where we have so many regional towns and people are going to spread out. No, they're all going to be concentrating around the 5 major big cities, right? Sydney, Melbourne, Perth, Brisbane, Adelaide, maybe Gold Coast, Newcastle as well, but in the major cities. And we're already one of the most urbanized countries in the entire world. And that's only going to continue because there's distinct benefits, particularly in today's modern age, of living in a concentrated area, in inner urban type areas. So we're only likely to see more and more unit development, high-rise development, concentrated living where people have the flexibility. We don't live on the farms anymore where our pace of life is much slower. Today, it's fast-paced, but we want to have the accessibility to facilities, schools, shops, training, gyms, all the stuff that we all are used to, particularly those of us living in the city. So it's only likely that we're going to see massive population swells over the next 10, 15, 20 years plus in those major cities. So again, this is why we've chosen these type of properties. All right, great for investments. You don't want to be buying 5-bedroom mansions as an investment. All right, you want to go for the smaller properties that people can actually genuinely afford to purchase and then rent down the track. Now, if we look at the 3 properties on the website, you can work through this yourself. The website's live. You'll see their key dates of when the offers close to get involved, when the properties are then going to be purchased, when the settlement dates of the properties are going to be. It gives you a demonstration. If the property's built, it shows you internal pictures of the actual property. If it's not built, it shows you, comparable property to the standard and the quality of the properties that are going to be finished. Remember, 2 of the properties aren't yet finished. They're under construction. 1 of the properties is already finished. It shows you the purchase costs involved, the stamp duty, etc. It shows you the rental, indicative rental yields. It shows you the profile of the suburb. Okay, so you get a lot of people are asking me, Daniel, how do I know what the returns are? How do I know where the property is? How do I know what the neighborhood's like? Well, the website shows all this information, right? We've been very detailed to give you a good underlying understanding of every single one of the different properties that you're investing in. Okay, and like we said, there's the greater Sydney area, there's Parramatta, there's the Sydney CBD, and the airport. We've chosen that north-northwest corridor for the first 3 properties because there's an absolute huge amount of infrastructure and transport expenditure going up specifically into that region. And that's one of the areas where the town planners of Sydney are expecting quite a surge in population growth over the next few years. And Tony Hamilton joined our company earlier this year. Huge amount of background and history in real estate, and he and I, particularly Julie's been involved as well, but mostly Tony and I have been identifying properties specifically in Sydney so far, specifically for the DomaDirect system. I showed you this last week, right? So the Sydney Northwest Priority Urban Renewal Corridor, right? Spending about $8.3 billion at the moment, and that's just New South Wales Planning and Environment. That's just the government putting in infrastructure. I mean, there's developers all around building more units and development and expanding the population base. The Westmead property, this one is very exciting. Right next door to Parramatta, about 20 odd kilometers out from the CBD. And I mean, when I saw this one, I said, this absolutely has to be in the portfolio. You look, it's directly across the street from Westmead Hospital, walking distance up to Cumberland Hospital, and also directly next door to the University of Western Sydney. I mean, the rental demand, I'm sure you'd agree, is absolutely insane in that region. And about 1.5 kilometers walk back down to Parramatta, to the Westfield out in Parramatta, all the shops and the offices. It's just a fantastic spot. And about 200 meters from the Westmead train station. So absolutely brilliant, that particular one. Right? And it's already built, it's already finished, it's up and ready to be tenanted. So this one's ready for completion, ready for settlement straight away. So that one will start generating rent. And very nice finishes, all tile floors, Smeg appliances. The details are on the website, but tastefully done specifically for either owner-occupiers in the building, in this case, obviously tenants. The Waitara property, okay, it's about 15 kilometers just north of Parramatta, but a bit closer to the Sydney CBD, 19 Ks. And this particular one as well, just walking distance to Hornsby Hospital, walking distance to Hornsby Westfield, 5 schools within walking distance, the Waitara train station about 300 meters away. So again, excellent location for shops, schools, train, transport, the lot. All right, now this one's under construction at the moment, right? It's directly across the street, you can see there. This is the artist impression and indicative interiors. Okay, this one's expected to be finished in October 2016. All right, so nicely, tastefully done, ideal for tenants. And finally, Kellyville. This one here, again, 12 Ks from Parramatta, 27 Ks out from Sydney CBD, and really quite in the center of the overall greater Sydney geographic area. Again, 4 schools within walking distance to the Kellyville Shopping, Castle Hill Country Club, industrial centers, Castle Hill shopping areas. So this one's a little bit further out, but it's also a good price, good value, 2-car garage space with this one, large balconies. So again, it's a little bit further out, but it gets a lot bigger space, particularly in double car park. You imagine in a 2-bedroom apartment, having a double car park is quite important for partners living together and having cars. So yeah, we saw this one. We thought this one's a really good one for the portfolio as well. So we had a lot to choose, a lot of different properties. We ran all around Sydney with lots of different developers, and these were the 3 we thought this was the best combination, we thought, for value, for rentability, for long-term yield, and potential capital gains. We thought these were the 3 we'd want to first head off with, right? All of them very, very architecturally designed, stylish-looking buildings in great areas, right? The internal shots. This one again is under construction, so these are indicative photos, but you can see, tastefully done, open plan, exactly what you'd expect in modern day development, right? And these are actual pictures. We sent our camera guy out there to take photos and video of the actual site. So it's currently under construction like this, as you can see, and it should be ready by about July to next year. So about, 8-9 months away from now. So it's under construction now. Okay, so let's go through some of the frequently asked questions that we had from last week. We got a lot of questions. I can't go through all of them, but what I have done is on the DomaDirect website, up the top right-hand corner, you can see it says FAQs. Just this afternoon, we put this up there. So if you click on that, up will come a PDF document of all the questions we got last week. Okay, so I'll put all the questions, and I've written up the answers, and I've had DomaCom go over them, make sure they're all correct as well. So there's a document there. You'll probably see your question if you were the ones asking it. It's pretty much word for word your questions that you put up. So I put up all the questions, I put up all the answers, but we're going to work through about 10 or 11 of them just now, because I think they were very good questions, and I think if you're thinking them, chances are there's heaps of other people thinking them as well. So all of you can go to the website, check out all the FAQs, but let's go through some of them now. Can we diversify over more than 3 properties? Well, of course you can, but not yet. We've got one portfolio available at the moment, which has got the 3 properties, but we will be bringing out more portfolios in the future. Okay, but we've just started off with the one portfolio to start, give everybody a chance to see what kind of uptake there is, what kind of demand there is, etc. But we're already working on more portfolios for DomaDirect as well, but we've got the first one going at the moment. And so just finishing that off, you might choose to invest in this first portfolio. You might put in the $6,500. You might think to yourself, oh, I got more than that. Well, you might want to save some for the next portfolio, which we'll have out soon as well. And then every time you get a bit more money into your cash balance, either from rent or if you deposit some more in, right, once it gets up to a certain level, you'll be able to purchase more portfolios in the future. How are units values determined when I want to sell in the future? Well, a couple of ways. Number one, DomaCom have an independent valuation done on every single property every year. Okay, so every year the properties are independently revalued, and if the value has gone up over that year, then that readjusts the unit price of that property based on the valuation. Now, with the secondary market, just like the stock market, let's say, for example, you buy units initially at $1, okay? And 3-4 years from now, the property value has doubled, okay? So you still got your 10,000 units, say at $1, you've invested $10,000 into that property. You got your 10,000 units, but now the units are worth $2 each. So you still have 10,000 units, but they're worth $20,000 in total, right? $2 per unit. Now, let's say that's based on the valuation. The recent valuation was at $2 per unit. But the valuation only comes out once a year. Let's say the valuation was 6 months ago, and the market's hot, right? And you think to yourself, well, the valuation says $2, but I want to sell my units. I'm going to put them into the DomaCom platform secondary market. I'm going to put them on at $2.50. So you can choose to put your units up for sale at whatever price you want. Now, obviously $2.50 is higher than the registered unit price, but that's fine. Just like the stock market, if you want to sell your shares for a higher price than the current price, you can put them on the market at a higher price. Now, if nobody believes that they're worth $2.50, if no buyers there at $2.50, then you're not going to sell your units at $2.50. But if the market's hot, other investors might be thinking, okay, the independent valuation, and everybody knows valuations tend to be conservative, was at $2, but I really want to get into this area, I really want to get into that property. Here's some for $2.50. Maybe I won't pay $2.50, but maybe I'll offer them $2.40. And if you want to prepare to sell at $2.40 or maybe $2.45, you eventually find a match between the buyers and the sellers. No different than the stock market, right? It's the same concept, same secondary type market. So that's what you can do in the future. So in the future, you'll be able to put your units up for sale in the secondary market, and you can say what price you want to put them on at. If the buyers are there to buy them off of you at that higher price, great. That'll be the price that you transact at. The independent valuation every year will set the unit price, but the actual price being traded can fluctuate above or below the set unit price based on supply and demand of the individual units. Number 3, do unit holders have meetings to discuss items of concern, for example, a new air conditioner or any serious repairs, or is it put to a vote by the property manager? Now, this is a really good question, and we've got a really detailed answer on the FAQ page. And because it's a longer answer, I'm going to actually read it out just so I don't miss any points, because I want to make sure because it's quite a good question, and it's quite important because it's compliance-wise. All right, so the answer here, and you can read this yourself off that document, right? So unit holders don't communicate with each other, and they don't hold meetings. Okay, so one of the great things about fractional properties, you're not getting into a club with a bunch of other people where you've got to have meetings and discuss it, and somebody's loud and somebody's a pain in the butt. None of that, right? It's completely anonymous. When you buy shares in BHP, you don't have meetings with other BHP owners, do you? No, right? The company is professionally managed, and you get distributed out your dividend, and you can sell your shares on the market. And that's about the extent of your involvement. It's the same thing here. You're buying units, like shares, in a property sub-fund. The property is professionally managed for you. You just get paid your distribution. You don't have meetings with other people and have to discuss all this. There's no responsibility on your part. You're just investing, okay? So we don't communicate or distribute unit holders' contact details or phone numbers to any of the other unit holders at all. Now, all property sub-funds are professionally managed by licensed real estate management agents appointed by DomaCom. So DomaCom makes sure that the professional property agents managing the properties on behalf of the DomaCom fund. The property managers have a nominated amount with which they're authorized to spend up to in relation to repairs and maintenance of the property. So DomaCom says to the property managers, you can spend up to this amount without contacting us. Right? It's a pretty small amount. And that allows them just a bit of cash if they have to do small repairs or whatever needs to be done. Any amount greater than that, they have to contact DomaCom for advice. Now, DomaCom, they maintain a cash reserve for each property subfund sufficient for unexpected repairs, like, for example, a new air conditioner or that sort of thing. Okay, and maybe a new whatever chattel might be inside, right? That the company, the dryer, for example, a clothes dryer, that type of thing, some appliance. Now, the responsible entity, Perpetual, states that the property must be maintained to a professional standard. So, like I said earlier, DomaCom takes out landlord protection insurance and building insurance. So if there's ever fire damage or tenants aren't paying the rent or they create damage over and above normal wear and tear, then the insurances cover those, right? In the event that there is capital required to repair, maintain, or improve a property in a subfund over and above insurance claims, insurance cover, which would otherwise compromise the quality of the unit and or the rental return. So for example, let's say now these properties are brand new, so you don't really expect any cost involved with wear and tear for some years. But sometime in the future, maybe 5, 6, 8 years from now, the properties will probably require new carpet, probably could use a coat of paint. If it's deemed by the property manager that, look, we're not getting the rent we could be getting if the property was freshened up, right? Then the responsible entity, Perpetual, says in the PDS, the product disclosure statement, that the properties have to be maintained to a professional standard. All right. If they drop, because it's not just you investing, you got a whole group of people. So Perpetual is looking after everybody's investment. So if the quality of the unit is dropping because it's being neglected, then money has to be spent, all right, over and above the amount that DomaCom hold and over and above the amount that the property agents are allowed to spend without noticing. Now, for example, this would be a new coat of paint, new carpet sort of scenario where it could cost a few $1,000s to redo the apartment. In that situation, right, DomaCom issues what's called a supplemental raising. That is, more units in the property subfund are issued in the property subfund at the current market value and offered for sale back to the unit holders in order to raise money to then do that, to cover that expense. This is similar to a rights issue in the stock market where you have an opportunity to buy more shares in the company to raise more capital for the company to go and do whatever the company's doing. Now, DomaCom, right, I'll say this clearly, DomaCom informs the unit holders of the supplemental raising by email. Unit holders are then told of the expense and the amount required to raise. They might say, like, you need to raise $3,000. Unit holders are offered 2 weeks to respond if they are prepared to purchase more units in the property subfund in proportion to their existing unit holding. So if you own 1% of all the units, then you're offered a chance to purchase more units in proportion to your 1%. Now, you're given 2 weeks to say yes or no you want to do that. If after the 2 weeks, some people choose not to do that, obviously there's some units left over that haven't been purchased. Then what DomaCom does is goes back to everybody again and say, look, we've raised some money, but some people chose not to take up the extra units. So we've got these additional units available, right? Still to the same subfund unit holders. Who wants to buy some more over and above your existing unit holding? So you'd be increasing your stake in that particular property. If after that round, right, if once again not all the new units are purchased, then the offer is opened up to all other DomaCom investors, right, other property subfunds. They're then allowed an opportunity to buy some units in that particular property subfund. If after another 2-week period, not all the new units have been purchased, then that demonstrates to the responsible entity that the existing unit holders do not want to maintain the property to a professional standard. That triggers a wind-up event, right, which means that the property is placed on the open market and sold. Now, once the property is sold and all the expenses of sales commission, etc., are paid, then the unit holders receive their share of the net proceeds based on their share of units in the property subfund. So there's a consequence, right? So if the property needs to be maintained, think about this, right? If you own the property and the property needs to be maintained, you'd have to come up with all the money yourself. In this case, you're in a fractional property investment, so you're one of many owners. Now, you might be keen, yeah, I'll buy some more, I want to keep this property going well, but other people might not want to. So you're given a chance to buy some extra units and increase your stake overall, or other people are invited to participate as well. But if after all of that, after weeks and weeks of offering this, enough money is not being raised, it demonstrates that those unit holders are not serious about being involved in this property. And so therefore, the responsible entity will not let the property fall into disrepair. Right? If people don't want to contribute money to maintain this property in its condition, then they'll put it up for sale, sell the property, and then everyone gets paid out in proportion to their unit holdings. Now, bear in mind, it says here at the end, please remember that at any time, if for any reason you yourself, like maybe one guy is holding out, I don't want to buy any more units. Well, fine. But if that person doesn't want to be in this property subfund, you don't have to hold out and maybe drive and force a wind-up event. You can always just sell your units in the secondary market. So at any time, once you've purchased the units, one of the questions people had is, how long do I have to hold my units for? No time. As soon as they're issued to you, you can turn around and sell them on the secondary market. So at any time, if you don't want to hold some or all of your units in that property subfund, you have a solution to sell your units without the property having to be sold, right? You can just sell your units on the secondary market, just like in the stock market. You can sell your units and get out. Other people can still continue with the property. So I hope that's a really good question, and I hope that answers it. As I said, it's listed for you in the FAQs. You can go back through and read it. And if you still have more questions about that, you can type in a question tonight. We'll go through all the questions, or call the office, or send us an email. So how do you treat equity after capital appreciation? Can you use it to purchase more units? Another good question, okay? So when you purchase units, properties settled, properties tenanted, rents coming through, net rents distributed back to the various different investors into your cash balance account or into your nominated bank account, whichever you decide. Capital appreciation, however, right? So if you bought the units at $1 and now they're worth $2, okay, then you can't use the equity. It's not like CFDs with IG where you can use the unrealized gains as security or as margin for more trading. No, you've got capital appreciation in your units. If you choose to sell some or all of your units and realize that as cash, you could then reinvest that cash into something else. But you cannot use the unrealized capital gain in your units as security to purchase other units. You can use the cash income from the rent that you're getting, right? And if you sell your units, you've got cash to buy different units, different property subfunds, but you can't use the equity you've got. So that's just treated as a capital gain. Now, you don't pay tax on that, of course, until you sell. So it's exactly like owning a property. You can own the property for years and years and years and years and years. It's only when you sell the property do you have a tax situation, and then you'd be subject to capital gains tax on these type of investments, okay? So that's how, and again, I'm not an accountant. DomaDirect does not provide personal tax or financial advice, so you need to speak to a licensed accountant or financial planner to specifically go over your personal scenario. But in a general sense, all right, equity, treat this exactly like owning shares or property. You don't pay tax on it until you actually have a realized capital gain when you actually sell the units in the future. Number 5, I may wish to invest in my own name and also a trust name. Is that possible? Absolutely. You can have as many different accounts. You just have to go through the account opening process multiple times, but each account opening process, you just have a different entity involved, right? It could be a personal name, a joint company, a trust, self-managed super fund, etc. Is it possible to use the first-time home buyers grant with this strategy? No. Because technically here, you're not buying the property, are you? Your name is not on title, so you can't then claim the first-time home buyers grant. You're buying units in a managed fund, which holds a property as the investment for that particular property subfund. But buying units in DomaDirect doesn't stop you from getting the first-time home buyers grant later on down the track if you become a first-time home buyer and your name is actually on title of the property. So it doesn't hurt you, doesn't help you, right? The first-time home buyers grant is specifically for people who buy a property in their own name for the first time. And there's qualifications around that. So this won't affect your qualifications if you qualify for first-time home buyers grant. Would DomaDirect be interested in being introduced to property developments around Australia? Absolutely. Obviously, we've got the first portfolio coming out now, but we're already working on the next ones, and we'll look to work with developers in the major cities in various parts around Australia. So if you are a developer or if you have contact with a developer and you think that the properties that you have might be of interest to us, by all means, please contact us, and I'd love to talk to you. And Tony would get in touch with you as well. Is there a minimum time limit from ownership to sale? No. So like I said earlier, once you've purchased the units and they've been issued to you, you can turn around and sell them. Now, obviously, we're dealing in real estate it doesn't fluctuate in value like the stock market does. So this is not the type of platform where you would buy some units and then turn around and sell them a week later. It's not like the stock market. It's not Forex, right? This is longer term investment. So realistically, you're probably going to be holding these units for, I would think, a minimum of 2 to 3 to 4 years or more. So this is long-term investment where you're buying a stake in, residential real estate, fractional residential real estate. Okay, but no, there's no limit. You can turn around. So if you needed to sell them, you can go to the secondary market, sell your units in the property subfund on the secondary market as soon as they've been issued to you, which would be just after settlement of the property. Now, how many unit holders are there to each property subfund? Is there a limit? Well, there is a limit because the minimum investment per property is $2,000. So if the property was worth $1 million and the minimum investment is $2,000, then there's maximum 500 investors. So if everybody puts in the minimum amount of money, then it would take 500 investors to come up with $2,000 each to equal $1 million. Actually, a couple more than that because you got to cover the purchase costs as well. So there is a limit based on that. However, that being said, I do expect some people to put in more than the minimum $2,000 per property. So that will reduce the number of investors. So it'll vary between properties based on the amounts each investor puts in and the overall value of each property. Number 10, how do we find out about each property, its features, due diligence, etc.? DomaDirect website, right? So the DomaDirect website lists all the property features, the quality of the construction, the location. There's a map. We make up a video for each property to demonstrate and show you where all the properties lie and what all the features around it. And the indicative rental return. If it's already finished and it's already got a tenant, then we'll show you the actual rental return. So all that information is detailed for you on the DomaDirect website. And finally, what kind of updates will we receive about the properties once we invest? You'll get a number of updates. Okay, so DomaCom, right? DomaCom issues every month a statement showing your rental return into your cash balance account. They also issue, actually, here we have it here, okay? So DomaCom issue they also provide an annual tax statement and an annual consolidation report of the individual's investment. Plus, of course, they have a independent valuation done every year on the property, which may readjust the unit price if the property value has changed over the last year. Plus, you can contact DomaDirect, and we will have information available about the properties as well. So, and you'll know the location. So you actually have the address. You can look at it on Google Earth. You can drive by it, and you can have a look at the neighborhood. So that's one of the great things I think about DomaDirect. Unlike investing, say, for example, in a real estate investment trust or REIT that's set up by the big banks, Commonwealth Bank or Macquarie Bank, and these type of trusts, they end up owning a lot of commercial property. But as the investor, you don't even know what they have. You don't know what they're doing. Here, right? You know exactly what the properties are. You know exactly what the addresses are. And one of the cool things too, we didn't talk about it in the last two webinars, but you're purchasing units, $2,000, approximately $2,000 each in the 3 different properties. Let's say in a few years' time, 2 of the properties you would like, and one of them you're not so fussed about, you can sell off some or all of the units just in that one property. So even though you spread your money across 3 different properties, you're not forced to sell them all out at the same rate. You can sell down some or all of just one of them or 2 of them and still keep the other one. So you have 3 separate property sub-funds that you've got investments in, and you control the units on each of those independently. All right? So unlike a real estate investment trust, you invest in a big bank's real estate trust, and then if you want to get out, you can't just sell off some of the stake in some of the properties and keep the other ones. You've got to, when you sell your shares in that property trust, it's across the board. So it's a great, great system here because you have fine control over which individual properties you invested in and then how you manage your future ownership of those units as well. Okay, so the final steps then, right, once you've done this is go to DomaDirect.com, right? From there you can open up an account, you can review the website, look at the different properties, contact our team if you have any questions, and of course next Monday night, so every Monday night I'll be holding webinars like this. Next Monday night you can watch me again, and I'll go through the latest. Now, by next week we'll have the DomaCom platform will be up and running. You'll be able to come online with me and have a look at actually how you place your bids. And then in 2 weeks from now, so not next week, week after, Arthur Nemidis, who is the CEO of DomaCom, he's agreed to come on and sit with me live during this presentation. So you'll be able to ask questions directly to him as well, and we'll be able to update you with the latest developments at that point. Okay, and if you have any questions or issues, there's our phone numbers, info at 8766-0459 or info at DomaDirect.com, right? And these are available off the website. So just go to DomaDirect.com and all the details are there. Fantastic. All right, let's go through some live questions now. How are we tracking? Okay, that was a great time. So we got a ton of questions by the looks of it. Lots of questions. No, lots of questions. So, yeah, chances are I'm not going to get through all of these. I'll do my very best right now. But every single one of these questions, once again, we'll go through the questions. We'll answer each of them. But I'll also create another PDF list and put them up online as well. So if I don't answer your question immediately now, we will get to it. But let's get through it now. Are the units in a group of units, or do they have a body corporate system? No, there's no. The body corporate is for the actual property. So the property itself, if it's in a strata titled building, so multiple units in the same building, like the 3 we have, they're all in body corporate structures because they're all in multiple units in the same physical building structure. Then there's a body corporate, so there's body corporate fees. Another reason why we've chosen smaller buildings without swimming pools and without big elevators and stuff like that is it keeps the body corporate rates low. When you go into big high-rise and stuff, the body corporate fees eat into the rent, so the yield is lower. Still doesn't necessarily mean it's a bad investment, but you're looking more from a capital gain point of view in that case rather than a rental yield. We've chosen for the first 3 properties to not go into big high rises at the moment in an effort to keep the rental yields quite high. But the units that you're purchasing in, like I've explained tonight, that's the structure within DomaCom. The property might sit in a body corporate, and that is the body corporate is responsible for the insurance on the exterior of the building, the maintenance of the exterior of the building. We're responsible for the interior of the building, interior of the unit, and in that case, there's landlord protection insurance, there's building insurance on the inside, plus it's professionally managed, and so any expenses over and above that, normal wear and tear type stuff, then that's handled by the investors in the individual property subfund, like I explained tonight. Okay. Okay. Raymond Sphere is saying he's having trouble accessing it. I hope you worked that back out again. Okay, yeah. It says here, Yvonne Hugh is saying, Daniel, you mentioned you were going to speak about self-managed super funds that I can set up for $500. I appreciate that. We are. Unfortunately, I can't talk about it tonight. I most likely, I should say, we'll speak about it next Monday night. The company that we are dealing with to specifically set up self-managed super funds at a greatly discounted rate, we're not quite ready to launch that yet. My apologies. All right, so it is definitely coming. We're definitely working with the group. If you do not have a self-managed super fund, but you do want to set one up, your choices are either go to an existing accountant or financial planner who can set that up for you, or wait another week, and hopefully I'll be able to speak to you about it next week. We're very, very close, so we should have that sorted. I'm 99% sure we'll be able to speak about it next Monday. So in the meantime, you can set up an account in an individual name or joint name or an existing self-managed super fund, and then next Monday, hopefully I'll be able to speak about this particular business that can set up a self-managed super fund at quite a discounted rate for you. I apologize. I know I said I'd do it this week, but the other company's not quite ready for us, so we're just about there. What happens to invested dollar value units as capital value increases? Oh, I think I've pretty already explained that one, right? So each year the property is revalued by independent valuation. If the value has gone up, then the unit price reflects that. You can then ask to sell your units at a higher price on the market, and buyers might buy it off of you. But the independent valuation once a year sets the unit price, but the actual units can sell for a premium or discount from the set unit price. Lee Vesti is saying, if we're bidding for units, does that mean it's an auction? No, it's not an auction. Okay, so the price of the real estate is a fixed price. When we say bid, it simply means like first in, best dressed. So you're not bidding to try to bid up the price of the units whatsoever. So the price of these units has been fixed. The stake, the $6,500, that will get you approximately $2,000 into each property, right? You will pay the exact same unit price as everybody else getting in there. They call it a bid, but it's not. You're not bidding like an auction. It's just you're applying for the units, right? But it is a first in, best dressed. So if we have to raise, say, for example, 2.2 million, I think is approximately the amount has to be raised for these 3 properties. If you're in early, then yeah, you'll get filled. But if you're in towards the end and someone comes in and puts in 50 grand and there's only 40 grand left, then they'll only get 40, because you can't we're not going to increase the price of the apartments just because there's more than enough money available to purchase them. So the capital raising will be closed, and if you've missed out, or if you asked to buy 50 grand and you only got 40 grand, that's fine. Your 10 grand's there. You can put that into a different property portfolio that'll be offered in the future. Okay, but no, definitely the price of the properties will not be bid up. The price of the units will not be bid up by the investors. Okay, it's a very, very important point, because we don't want to create a fluctuating price of properties and units based on demand from this. So we've got fixed prices for the investment properties, which, like I said earlier, are independently valued, right? So they're not inflated prices. There's no hanky-panky, funny business going on whatsoever. You got to remember, you got ASIC and Perpetual, regulating this whole concept, and DomaCom take it extremely seriously. Right? DomaCom, in my opinion, will be this the dominant player in fractional property in Australia. They've set everything up correctly, and one of the reasons is because they're just so straight down the line. They've got the ASIC regulators, they've got Perpetual as the RE, and they're doing independent valuations on every single property to ensure that property investors are not coming. Can you imagine if they were cowboys and they were letting, they're inflating property prices and the prices were going up, people would just lose total faith. And DomaCom have spent millions and millions of dollars, and they've spent years and years of time setting this up. And it's the first time in the world this has been done. So, and Arthur Nemidis, who you'll hopefully meet 2 weeks from now, you saw him in the video last week, incredibly professional, extremely straight down the line guy, and has been in the financial industry for decades in Australia. So he's done it absolutely right. What is the expected rental return per month? Well, obviously that varies between different properties. The indicative rental yield, the indicative net rental yield, is listed on the DomaDirect website. So if you go into DomaDirect and you drill down into the 3 different properties, in fact, I'll do it now and show you what I'm talking about. Right. So if you come into DomaDirect, right, you can scroll down. Right, you've got the Sydney property portfolio. You can then say, for example, I'll go to the Westmead one. Right, coming up, you can see the prices there: 626, 825, 797. Come into the various different properties. Across the top, you've got information about the overall portfolio, the Waitara property, Kellyville, Westmead property. If I click on Westmead, right, scroll down, you see the purchase price. Right, it's a bit higher with the total cost. Right, so $626,015 is the total acquisition cost, which is legal fees, the stamp duty, the purchase price. It's got the indicative rental yields, the net rental yield. That's net after the DomaCom management fee. All right, so you got the gross rental yield, 3.98%. Take off the outgoings and management fee, take off the DomaCom management fee, leaves a net rental yield, all right, which is approximately 1.9% or 2%. That's similar to so people were asking me before, Daniel, what if the property is not finished? What happens to my money? Well, your $2,000 for that particular property, right, plus the associated amount for the purchase price, that $6,000 is sitting in the cash balance earning interest for you. So that's earning interest right now at 2.58% net, right? 2.8 less DomaCom's 0.22% fee per annum. So your cash that you put into this, even though the properties aren't finished yet, you're still earning interest on that property, on that cash, right? Similar rate of interest as you would be getting on a net rental yield, right? So you're earning a similar sort of form of income. Now, don't forget too, if the property is not finished yet, right, you're getting it at today's price. So, and you've locked that in. So even though you don't necessarily own it, if the market's still rising, then you still get the benefit. By the time the property is finished, the property value may be higher, so you're still getting the impact of capital gain should the property rise, even though the property is not finished yet, because you're getting it off the plan. And in the meantime, you're earning income, interest, on the full capital. So the $2,000 per property, that's also sitting in the cash balance account. So it's earning interest for you at 2.58% per annum until settlement, when the $2,000 is then used to settle that property, plus a portion of the $500 to cover the stamp duty, etc. So don't think that your money's sitting there doing nothing. You're getting a similar return in interest as you would be getting from rental yield, and you still get the effect of capital gain should the property rise before settlement. And we've certainly seen that in Sydney over the last couple of years. Properties have been rising off the plan, so you still get that benefit. So it's important to think not to think that you're not getting any benefit from getting in now with a property that's not going to be finished for 6 months or a year. In fact, if anything, it's even better because there's no wear and tear going on the property at the moment. But there could still be some capital gain if that area rises in value and that property rises in value prior to settlement. And you're still getting the benefit of an income from interest, which is similar to the net rental yield that you would get on the various different properties. Okay, Daniel, could you confirm that your percentage share in the received rent can be withdrawn at any time from a cash account? However, the units purchased are illiquid until conditions in the product disclosure statement are met. That is, DomaCom decide to sell the property or a certain percentage of it. Okay, yes, I can confirm, right, that your percentage share in the received rent can be withdrawn at any time, right? So, well, the rent is paid out on a monthly basis once the property is completed and tenanted, right? And then you can nominate to have that put out to your own personal bank account, or the income from the rent can stay in your cash balance account, okay, earning the higher rate of interest that DomaCom has negotiated. Then, once you've been issued your units, you can then sell them in the future on the secondary market. All right? Okay. How are the properties or units valued when you want to sell? Like I said, every year, you probably already heard this answer, right? Every year the property is revalued, and then that sets the unit price for the year. But you can put your units on the market, on the secondary market, higher than the unit price if you want to, right? The unit price is really just an indicative of the independent valuation. The market itself might be hot, and you think, oh, I'm going to put my units on the market. People, if there's willing buyers, then you can sell at a price higher than the valuation set unit price. Because again, most people recognize that valuations tend to be conservative. Okay. Aidan Goodwin is saying, Daniel, can you give us an example of how much of a percentage $2,000 gives us of any one of your properties? Well, it's pretty straightforward. If the property's worth $1 million and you're putting up $2,000 and you're getting 0.2%. If you were putting up $20,000 into that $1 million property, then you would be getting 2%, right? So if the property's worth $600,000 and you're putting up $2,000, and you're getting 0.3% of the value of that property. If you were putting $4,000 on a $600,000 property, you'd be getting 0.6%, right? So it's pretty straightforward. If the property's, whatever the property value is, divide that by $2,000, that's the minimum investment per property, that's your percentage stake in that particular property. Let's keep going. Again, if you've got more questions, now's a good time to fire them through. After the property has been purchased, will there be any situation that the property will be sold for whatever reason in the future? Well, no, there's set reasons for why the property would be sold. Every 5 years, the unit holders have to vote whether they want to keep going in the property or if they want to sell. And if they want to sell, the property is put on the market. Now remember, you might not want to continue, but everybody else does. That's fine. You're not forced to stay in the property. You can choose to sell your units on the secondary market. However, if collectively, a certain percentage of everybody wants to sell, then the property can be put on the market, right? These details are covered in the PDS, the product disclosure statement by DomaCom, right? But the important thing to realize is that you're never locked in, right? You can always sell your units, put them up for sale on the secondary market. What is the starting unit price? The unit price starts at $1. Okay, so the way this works, the $6,500 that you're investing, okay, the $500, as we know, is for the purchase cost, the stamp duty, etc. And then the $6,000 gets split up, $2,000 into the 3 different properties. You will be issued 6,500 units that are originally issued at $1 each. However, the $500 amount is then used to cover the cost of the stamp duty, etc. So you'll end up with 6,500 units issued at about 92 cents per unit. Because if you multiplied 6,500 by 92 cents per unit, it would come out to about $6,000. So we recognize that stamp duty, those are costs, right? That they're not value, all right? So you'll get 6,500 units issued to you at 92 cents. Then, in the future, if the property rises in value, all right, the unit price could rise up to $1, $1.05, $1.10, $1.20, $1.50, whatever, in the future. But remember, don't forget though, you can always turn around and put your units back on the market for a higher price than the unit price. So though you get issued 6,500 units at 92 cents, which equals $6,000 worth of equity you have in the 3 properties, you could put them back on the market for $1.50. Now, if you do it straight away, there's probably no one going to buy it off of you because you only just bought them for the equivalent of $1. Now you're selling for $1.50 in a very short period of time. So chances are no one will buy them. But give it 2, 3, 4, 5, 6 years in the future. Yeah, if the unit price is up around $1.50, you might put them on the market for $1.70, $1.80, and you may find buyers at that time. Erica Gellert saying, Daniel, I have another question. As unit holders might want to sell their unit at different times, what will the value be given to the unit? I think I've already answered this question. Would there be a new valuation? I think this question is from a while ago. So Erica, I'm probably sure I've already answered that question a few times now. All right, property is valued every year independently. You can put your units on the market at a higher price, etc. Okay, here's a good question again from Erica, saying if a unit is vacant for a while, there could be a possibility that the ongoing costs, rates, repairs, etc., are no longer covered by what has been saved in the sinking or in the fund. Yes, if there's a period of time that the property is not rented, right, then in which case DomaCom might run out of supplemental funds they have to cover it. Now, don't forget though, there's no mortgage, so there's no interest being charged on the property. So the only expenses that would be required would be body corporate fees, maintenance of the property. Now, remember, we've chosen, I'm sure you'd agree, if anyone knows the Sydney area, we haven't gone out to the fringe of Sydney. We've gone out to very built-up areas directly across the street from shopping centers, from hospitals, from universities, from train stations. We've chosen really good areas. The idea that these properties would not be rented for extended periods, like months and months at a time, the risk of that is incredibly low. I mean, I can't say it's zero, but it's incredibly low, right? And any property can be rented. It's just a matter of what you charge for the rent, right? So the rent will come in, and because there's no mortgage on the property, you're not paying interest. There's no expenses like that going out. So it really is just the underlying management expenses for the property, which will typically be covered by the rent. Now, if the property is not rented because it's been damaged by the tenants, well, we have insurance for that. We have landlord protection insurance to cover the rent. We've got building insurance to cover the interior, chattels and fittings, etc. So, those are covered by insurances. So there really is, incredibly low risk that the property is not going to be. Maybe there's 1 or 2 weeks in between tenants, but the idea that there's months and months at a time, it's most likely not going to happen. Will you be going through the all-important numbers? I'm pretty sure I've done that. And if there's more detail, like I say, on the DomaDirect website, you can go through that directly. If you have any more particular questions, please don't hesitate to contact the team. Right? We'll answer all. We want to make sure everybody's totally cool with everything we've talked about tonight, etc. I think I've gone through a ton of questions tonight with you guys. Just double check to see if there's any more questions popping up. Just refreshing here. Will there be any guarantee on the sale on the secondary market when there's no one wanting to? No, there's no guarantee. It's like the stock market. There's no guarantee that there'll be someone there to buy it off of you. But we have a situation. Now, here's a real cool thing. I haven't mentioned this part yet. In the future, when you go to sell your units on the secondary market, the people buying the units off of you in a secondary market, okay? There's no stamp duty. There's no conveyancing costs for them. Wow. What? Yes. When you involved now, initially, when a property is first purchased and put into the DomaCom system, yes, stamp duty is paid. Legal fees are paid, just as per normal, right? And then the property goes into the DomaCom fund. And we pay 8% extra to cover the cost of stamp duty, etc., right? The 8% is more than enough, but most of that gets covered in the cost. However, in the future, if an investor sells their units on the secondary market, the new investor coming in buying those units in the property subfund off the original investor, there's no stamp duty, there's no conveyancing costs. Why? Because the property itself is not changing hands. So as far as the government's concerned, perpetual corporate trustees still owns the property, right? In trust for the unit holders of the subfund. It's the units themselves that are changing hands. And because DomaCom is structured and set up down in Victoria, Australia, there's no stamp duty charged on the transfer of units in a managed subfund. So as a consequence, I think this will be a really big driver for the secondary market in a few years' time. It's going to take a few years, obviously, for the secondary market to really be cooking, because most people who buy now are not going to sell their property or their subfund units for some time. I mean, this is not a flick it type strategy. This is buy and hold for you're investing in real estate. It's not a high flick, like it's not a highly liquid market like the stock market or forex. It's you buy and hold for years and years at a time. However, give us 2, 3, 4, 5 years, and now the property is starting to sell in the secondary market. One of the big attractive things, and then by then, of course, fractional property will be so much more understood and so much more mainstream in Australia and internationally. that the new investors coming in, one of the advantages will be that they don't have to pay stamp duty, right? Which will save them some money, get more money into the property rather than in costs. So that'll be a big driver. So when you say that, is there a guarantee that people will be there in the future? No, there's no guarantee. But it means that, again, 92% of the population can participate in and invest in real estate, and there's an advantage in the future of not having to pay stamp duty on the purchase of units in the secondary market. Right now, yes, we have to do it. But if you want to be a part of this now, you want to get some real estate now, I mean, let's not worry about 3 or 4 or 5% of stamp duty, because the property value might go up 10 or 20 or 50% within the next few years. But down the track, one of the advantages of new people coming in to buy off of you won't have to pay the stamp duty component. So another reason why it could be really good in the future for a secondary market. A great question from Marilyn here. Daniel, will DomaDirect go into commercial properties as well in the future? Absolutely. All right, we're already talking to some commercial property groups because I think that's a big market. Myself personally, I've owned tons and tons of residential property, a few commercial properties, nothing too big. I've always personally wanted to get into some really big commercial, like $60 million, $100 million type developments, multi-story shopping centers, Kohl's, Woolies, malls, office buildings, that sort of thing. But I've personally never had enough money to go and do that myself, nor have I had enough experience to go and do that myself. I've been too busy doing my other businesses. But I personally would love to be involved and be able to purchase a fraction of a big commercial property. So like 60 million, 100 million, that sort of thing. So definitely we're talking to groups already right now about bringing that out. Well, hopefully by next year, early next year, as is our hope. We want to see, we've got to get some traction going with DomaDirect initially, and then we'll be able to bring some commercial property to the table. But I've already got groups that are keen to do it. I've spoken to them already. And they're saying, just proves you got the investors, Daniel, we can bring you the property. So definitely commercial property will be in the future. Are the units in a group? And we already talked about that question. Okay, guys, I think I've pretty much answered most, if not all, of the questions tonight. Like I said, all of these questions we'll answer as well and have them up on the FAQs. And my team will be back to you. If you have any more questions, please don't hesitate to contact the guys. All right, there's our details. Thank you very much for your time tonight. We've spoken for about an hour and a half, so we'll finish it up there. I'm sure you've enjoyed it. For now, of course, go to DomaDirect.com, log in, put your details in, set your account up, deposit your funds. By next week, we'll go through the DomaCom platform. You can actually bid for the, apply for the units and start the ball rolling with this process. All right. Hopefully, we'll have the first 3 portfolios sold, and we'll bring out another portfolio soon thereafter. I certainly hope you enjoyed tonight's presentation. May I wish you all profitable investing. Good night.